market optimism was driven by a meeting between President Obama and House of Speaker Boehner regarding a deal to resolve the fiscal cliff in the U.S. It's reported that the difference narrowed significantly after the meeting as Obama responded to a proposal by Boehner that carried a major shift in his position on tax hikes for the wealthiest Americans. The most dramatic change in Obama's position was on boosting the tax rates for households earning more than $400,000 a year, compared to the prior threshold of $250,000. Though that's still way below Boehner's request of $1 million threshold. Meanwhile, Obama would like tax revenue to be raised by $1.2 trillion over 10 years. Down from his prior proposal of $1.4 trillion, and that is seen quite close to Boehner's suggestion of $1 trillion. Meanwhile, the questions of when and how to raise the so-called debt ceiling is still a big issue to be negotiated. Obama is still pushing for a 2-year increase while Boehner proposed a 1-year boost in the debt ceiling, tied to spending cuts. The Dow Jones was up 100 points overnight and positive sentiments sent Asian equities higher. Meanwhile, the dollar and yen remain soft and in tight range so far today. In Japan, the incoming Prime Minister Abe said after the Liberal Democratic Party's sweeping victory that, "We have to get the economy out of deflation, correct the strong yen, create jobs and boost growth." It's believed that Abe has learned his lesson as Prime Minister back in 2007 and his popularity is closely tied to the economy. And pushing the Bank of Japan would be his easiest solution, and analysts see him having rock-solid determination to push the bank for additional stimulus. Abe said that he has asked the bank's governor to consider establishing a 2% inflation target during a meeting today. Meanwhile, Shirakawa said he didn't discuss monetary policy with Abe and would not comment on what was discussed. In Europe, European Central Bank President Draghi said there was a gradual improvement in financing conditions in the second part of this year, and thus, the bank foresees a beginning of a recovery in the second part of next year. Though, he said that the medium-term outlook for economic activity remains challenging. Draghi emphasized that monetary policy and banking supervision will be independent to each other. He expects around 130 to 150 banks to be under direct supervision, while the rest under indirect supervision. He noted that the supervisory mechanism has all the powers to be effective. The challenge now is really in its implementation. The Reserve Bank of Australia minutes explained the factors leading to the rate cut of 25 base points at the December meeting. Policymakers noted further information evidencing peaking of resource sector investment and sluggish